Are you ready to unlock the secrets behind today's market movements?
That's right. Analysts like Jason Shapiro, Travis, and Michael Saylor offer deep insights into the current trading landscape.
Exactly. We've distilled their hours of expertise into easy-to-digest AI-generated summaries.
So stay tuned. Jason Shapiro kicks us off by discussing why doing nothing in this neutral market might be your best move.
And don't miss Travis as he uncovers hidden truths about the impact of unemployment on AirBNB investments.
Plus, Michael Saylor discusses Bitcoin's challenges that could lead to market volatility, essential viewing for crypto investors.
Today, we're analyzing market insights from Jason Shapiro, who discusses the current state of crowded trades and trading strategies.
Jason notes that there are almost no crowded positions in equities, currencies, commodities, and cryptocurrencies.
According to Jason Shapiro, the current market environment is largely neutral without significant crowding in trades.
This neutrality suggests limited opportunities for traders seeking to capitalize on crowded positions. Jason highlights that currently, with no crowded trades, there's no significant edge from positioning.
In such cases, traders might not find opportunities that typically drive market movement. What does Jason suggest regarding trading when conditions aren't favorable?
Jason advises that if traders find themselves in a neutral market, doing nothing might be the best course of action. Jason emphasizes the importance of diversification, reminding us that markets do not always trend upward.
He points out that a diversified portfolio can mitigate risks during fluctuating market conditions. What predictions does Jason make for traders in the upcoming weeks?
He suggests that traders should remain patient and wait for better setups that align with their trading strategies.
To summarize Jason's insights, it's essential to adopt a flexible approach when trading.
By staying patient and not forcing trades in a neutral market, traders can preserve capital and wait for better opportunities.
Welcome back to Real Estate Mindset. Today we are here to expose some alarming truths about unemployment and its impact on Airbnb.
Travis highlights that 15 million individuals have lost their jobs since 2020, and these losses aren't reflected in current unemployment statistics.
Let's dive deeper into how the true unemployment rate might be much higher than what is reported.
Travis explains how fluctuations in labor force participation can significantly alter the perception of unemployment figures presented to the public. Travis emphasizes the dangers of rising insurance premiums and inadequate coverage for Airbnb investors.
It's concerning to think how many Airbnb owners are unaware of the inherent risks they are facing. What does Travis foresee in terms of unemployment as we look toward 2025?
He predicts that if current trends persist, we could see a drastic increase in unemployment numbers, especially as economic conditions change.
What should investors expect from the housing sector related to Airbnb?
Travis predicts that many Airbnb properties will flood the market as increasing insurance costs make them less viable.
Travis concludes that potential investors must remain alert and responsive in this unstable market.
Understanding these trends and taking proactive measures can shield your investments.
Welcome back to Trade Brigade, where we are exploring today's notable gap up in the market and its implications.
Keeping track of key resistance levels is essential as we enter a potentially volatile week.
The gap up we see today could indicate a continuation of the trend unless key resistance is broken.
Monitoring momentum changes and price action closely is advised for traders.
The economic data from today, particularly the PMIs, will likely influence trading strategies later on.
It's critical to track these indicators to gauge overall market mood.
Critical resistance levels should be monitored closely as they could indicate points of rejection.
Should these levels hold, bearish sentiments could solidify.
It's paramount for traders to effectively manage risk today.
A disciplined strategy is essential, especially in unpredictable markets.
Looking ahead, volatility is expected to increase after today's PMI announcements.
How the market responds to these economic updates will significantly influence trading.
In conclusion, adaptability to market conditions and data is vital for successful trading.
Traders must stay informed and uphold discipline throughout today's trading session.
Today, we are examining a critical analysis by Michael Saylor regarding Bitcoin's current challenges and the implications for MicroStrategy, which has rebranded to Strategy.
Saylor's insights highlight increasing liquidity concerns and the impacts of leverage on Bitcoin stability.
Michael Saylor emphasizes that the decline in Bitcoin's price presents significant risks of forced liquidations for heavily leveraged firms like MicroStrategy.
He articulates that the company's aggressive leverage position escalates the stakes in this volatile environment.
Saylor explains that MicroStrategy began offering 10% preferred shares to tackle its liquidity issues.
This shift has raised concerns about the company's financial health, especially due to its reliance on Bitcoin.
According to Saylor, rising yields impose additional pressure on Bitcoin and firms with high leverage.
This could lead to tough decisions, like asset liquidation, to meet rising costs.
Saylor raises concerns about the gap between institutional adoption and actual commercial use of Bitcoin.
He observes that while Wall Street is showing interest, the broader commercial market remains hesitant.
Michael Saylor predicts that if current trends persist, Bitcoin could face more downward pressure on its pricing.
Without an increase in commercial interest, Bitcoin's growth potential could be severely limited.
Saylor concludes that it's essential for investors to be aware of the liquidity challenges confronting leveraged firms like Strategy.
He advocates for maintaining a balanced investment approach and exercising caution regarding potential volatility in the Bitcoin market.
Today, we're looking into an analysis by the technical traders regarding the recent trends in the equity markets as we approach April 4th.
The technical traders noted a significant market rally today, indicating a bounce amidst some bearish signals.
The technical traders predict an upward movement in the market leading into April 4th, suggesting alignment with historical trends.
They also highlight that the upcoming announcement of tariffs could serve as a pivotal moment for market dynamics.
The technical traders explain that market cycles suggest rising prices leading up to early April.
This bullish trend reflects recovery from previously anticipated lows. An interesting observation from the technical traders is the observed inverse relationship between stocks and bonds.
As equity prices rise, bond markets appear to reflect a corrective pattern. Looking ahead, the technical traders forecast the possibility of a market correction following the rally related to April.
They caution that the current upward movement might be a temporary dead cat bounce rather than a reversal of trend.
In conclusion, it's vital to observe how tariff announcements may affect equity prices in the coming days.
Investors should stay alert to present trends and be prepared for possible market corrections following April 4th.
Welcome to Thoughtful Money. Today, we're delving deep into economic challenges with David Stockman, a renowned expert on federal budgeting and former director of the Office of Management and Budget.
David highlights the precarious state of the federal budget, emphasizing that without substantial cuts, the U.S. could face severe economic turmoil.
David, what's your assessment of the current federal budget crisis?
I believe we're at a critical juncture where, unless we address the core elements of the budget, we won't have a chance to close the gap in our fiscal policy.
David, you mentioned the idea of a debt bomb. Can you elaborate?
Absolutely. As we approach the debt ceiling, political conflicts will create chaos, leading to interest rate pressure and market instability.
What specific measures would you recommend to curb spending?
One of the first steps would be to pass a rescission bill to eliminate wasteful appropriations from previous budgets.
Given the current landscape, what should we expect as this year unfolds?
The environment will grow increasingly turbulent, negatively impacting financial markets due to ongoing deficits and lack of decisive action.
What advice do you have for everyday investors in this uncertain climate?
I recommend focusing on more stable bonds and exploring income-generating assets as strategies to safeguard wealth.
And there you have it, a whirlwind of insights from some of the sharpest minds in finance.
Exactly. David Stockman warns us about the urgent need for cuts in federal spending, while the technical traders are optimistic about a market rally.
It's fascinating how they all agree that we are in a volatile economic landscape that demands strategic responses.
And don't forget the tension between optimism and skepticism. Michael Saylor's doubts about Bitcoin's viability clash with the more bullish view of the traders.
Speaking of clashes, Travis highlighted the hidden unemployment rate, which could really shake things up for AirBNB investors.
And let's not overlook Jason Shapiro's advice on patience. In a market without crowded trades, timing is everything.
If you're as intrigued by these discussions as we are, make sure to like this video and subscribe.
Your engagement helps us bring you more expert insights and timely analyses.
Join us next time as we unpack global trade dynamics, another exciting topic you definitely don't want to miss.
Stay informed and keep those financial discussions alive. We'll see you soon.